Bleeding Edge subscribers, happy Monday, welcome back. And today I'm going to show you a method to capitalize on the $1 trillion data center investment boom. And guess what? You won't need to purchase a single tech stock or another semiconductor stock to get it done. That's right, the $1 trillion investment cycle, it's really just kicking off. And over the coming years, the stocks I'll discuss today are potentially poised to gain substantially. This could be really an excellent addition to your portfolio, especially if you've already really invested in semiconductor stocks already. And look, even if you've missed out on investing in Nvidia, Supermicro, or AMD, I'll provide you with some alternative strategies to get you caught up there too. But let's first look at the magnitude of this opportunity. In just the first quarter of the year, just the first 3 months, four companies collectively invested $45 billion in property, plant, and equipment. Amazon invested $15 billion. Google invested $12 billion. Microsoft invested $11 billion, and Meta nearly $6.5 billion. A significant portion of these expenditures were directed towards developing data centers that power AI technologies. Now, I understand $45 billion. It's a staggering sum of money, but consider this. $45 billion exceeds the annual revenue of all but 93 companies in the S&P 500. That's correct. Just four tech giants are outspending what over 80% of the S&P 500 companies earn in revenue over an entire year. And they're doing that in just 3 months. And if you've been keeping up with the newsletter, you're aware that this figure is actually expected to grow significantly in the coming years. Back in February, NVIDIA CEO Jensen Huang made the following prediction. There is currently $1 trillion worth of data center infrastructure installed globally. Over the next 4 or 5 years, we're looking at an expansion to $2 trillion worth of data center driving software across the globe. So what should an investor do in this environment? First off, I've been strongly advocating for semiconductors for about a year now. At a minimum, consider increasing your exposure to this sector through a cost-effective but broadly diversified ETF like the VanEck SMH or the iShares SOXX or SOX. I recommend considering this strategy because a significant portion of the $1 trillion investment cycle will flow into various semiconductor technology companies. However, you might already have plenty of exposure to this sector. So how can you further enhance your investments without continuing to add to your semiconductor holdings? Well, the $1 trillion in spending isn't solely directed at semiconductors. This funding is also earmarked for large-scale infrastructure projects, including the construction of sprawling new buildings. Moreover, every new data center requires the construction of additional power plants and office spaces, really significantly boosting the construction industry. One kind of strategic investment opportunity actually lies in tool rental. That's right, tool rental. Companies like United Rentals are poised to experience increased demand as construction projects emphasize the need for rented equipment. Data centers really necessitate a range of heavy machineries from forklifts to security cameras to fencing and other equipment. Tool rental companies such as United Rentals are actually well positioned to benefit from this surge in demand. Also, investing in tool rental companies, it really provides a method to diversify your portfolio beyond technology stocks that you might already have significant positions in. Additionally, benefits from the tool rental industry include lower interest rates, which reduce the borrowing costs for companies like United Rentals to acquire new equipment to rent out. Furthermore, the potential election of either a new or returning administration later this year, that's going to probably prompt increased government spending, believe it or not, on various infrastructure, energy projects, and other construction projects, and that could further boost this sector. So in conclusion, the $1 trillion data center investment boom, it really presents a unique and compelling opportunity for investors looking to maybe diversify and strengthen their portfolios beyond traditional tech stocks and semiconductor stocks. By capitalizing on the massive infrastructure needs that really accompany the growth of data centers, such as construction of new facilities, and really the associated demand for heavy equipment rental, you could position yourself to benefit from the significant expenditures by industry giants like Amazon, Google, Microsoft, and Meta. That was the bleeding edge for today. I'll be back again later this week. See you then.